Hi everyone, and welcome to the Technical Analysis for Beginners series by Exo Ventures Consultancy. I'm Daniela, and in this series, we'll be discussing everything that you need to know to get you ready to embark on your trading journey. In this series, I'll be discussing everything from price and candlesticks, support and resistance, trend and trend lines, indicators, oscillators, and so much more. All right, let's get into it. So this is TA for beginners, and this is episode 1 in which we'll discuss price and candlesticks. So in this video, we'll be discussing what exactly is trading, what technical analysis is, how price is illustrated, because this can be shown in different ways, what are candlesticks, and what are candlestick patterns. But before we do get into it, please take this disclaimer into consideration. The content of this presentation is not financial advice. It is not an investment advice and does not constitute any offer or solicitation to offer or recommendation of any investment product. It is for educational and entertainment purposes only. I highly recommend that you do your own research on everything that is discussed in this and any other content provided by Exo Ventures Consultancy. And honestly, anything that you find on the internet at all, the whole ethos of crypto is to verify and validate for yourself. Okay, now that we have the disclaimer out of the way, let's get into the first part of this video. So, what is trading? The official definition of trading refers to the transfer of goods and services from one person or entity to another in exchange for usually money or other goods and services, etc. Basically, what you're doing with trading is you're transferring one thing in exchange for another thing. So basically, if when you were a kid, your grandma asked you to help her clean her house in exchange for an allowance or maybe some candy, this interaction would be considered a trade. You are trading your time and effort to help her clean in exchange for her allowance money or maybe candy. Okay. Now, how does this actually work in the real world? So a market is a system or network in place that allows trades between people or entities to happen. I'm sure some of you already know of a farmer's market. This is where farmers or other artisanal sellers come and gather to sell their fresh produce, their fruit, their organic honey, etc. to buyers in exchange for their money. There's the stock market where companies list their stocks in exchange for money from other companies or from individual buyers. There is the real estate market where homeowners or real estate developers sell homes and property in exchange for money from homeowners or other real estate investors. Now let's get this situation over to the crypto market. How do you trade in the crypto market? So trading in the crypto market is mostly driven by speculation. Let me explain. So when you speculate or you think and hope that price of a particular cryptocurrency will go up, you buy that cryptocurrency. And in trading, buying is also known as longing. When you speculate that the price of a particular cryptocurrency will go down, you sell that cryptocurrency, or also known as shorting. So these are basically the two simplified trades that you can do in crypto. Okay, so you enter a trade by, let me see if we can do this. Okay, you enter the trade by longing at a low price or buying at a low price in hopes that you can exit the trade by selling at a higher price. That is then a successful long trade completed. And the other trade is that you can enter the trade by selling at a high price, and then you exit by buying at a lower price. All right. So those basically, for you to know, are the main ways that you can trade in the crypto market. Those are the simplified versions. You can either buy hoping that it goes up or sell hoping that it goes down. Now, what is technical analysis? Technical analysis is a financial analysis method that uses patterns in market data to identify trends and predictions. Now, there are probably two words in here that not all of you are familiar with, so let me explain those. The first is market data. This is information that the market provides you that can consist of price, volume of the transactions, different indicators, oscillators, and we'll get into all of these in the different episodes. In this one, as you already know, we're going to get into price. And the second word that you might not know is trend. Trend refers to the general direction that the market is heading towards, or that price is heading towards. Okay. Now, since we are discussing price, what exactly is it in the context of trades? So price is the amount of money or the value that is set for something. Price can be affected by different factors. Specifically, it can be affected by the cost of production if you're talking about goods or products. It can be affected by the branding or marketing behind a product or behind a company. It can be affected by regulation, by the future expected value of that thing or of that company, by use cases, by competitor actions or competitor prices. It can be affected by the market condition or consumer conditions. Let me give an example of this. With this one, what we mean is basically like right now, the crypto market is in a bear market. What this means is that the economic conditions are not that great. Or for example, in the macro environment, the world is most likely right now in a recession or recessionary environment. This means that the economy is not doing very well. In these kind of conditions, people might not be willing to spend money on items that they deem are unnecessary. But in very great economic conditions or bull markets, for example, people might very much be willing to spend money on these same items. This is how market conditions can affect price. Another factor is supply and demand. Supply refers to how much there is of something. So if the supply is very limited, meaning that there's only a certain amount available of something, then automatically price tends to increase because there's just much less of this product to go around. Okay, now that you know what price is, let's get into how price is illustrated when we're talking about trading. So in trading, price is illustrated in price charts. This is basically a sequence of prices plotted against a specific time frame. Now, price can be illustrated within different time frames. For example, you can have the price of each minute, and then each representation is how much the price moved within that minute. You can also have charts with every hour, so you have the price movement of each hour, every day, every week, every month, every year. There are even smaller time frames available. It all depends on how much data you have on that specific thing that you want priced. You also have different types of ways that you can illustrate the price. Some examples are candlestick charts, line charts, and bar charts. Now, in this episode, we are going to be discussing candlesticks. Let me move myself out of the way. So, candlesticks are one of the most common forms of illustrating price because it's very comprehensive and easy to use. Basically, what you have is a body and a wick. Now, the different information that you can find out of a candlestick is very important. What you can find in this one illustration is the highest price of that time frame, the opening price, the closing price, the lowest price of that time frame, and whether the opening price was higher or lower. All of this information you can get from each individual candlestick within the chart. Now, as you can see, I'm not sure if you can see it on the screen, but basically on the green candlestick, you have the highest price, which is the highest point of the wick. And then once it's a green, as the default setting, the greens are bullish and the red candlesticks are bearish. When you have a green chart or a green candlestick, the opening price is always lower and the closing price is always higher. And when you have a red candle, it's usually that the opening price was at a higher price and then the closing was lower, so the candle's body is red. Okay, now you have a basic idea of what each candle looks like and what kind of information it's conveying to you. These are some different kinds of candlesticks that you can find within the chart. And as you already know, you have a lot of information displayed in each candle. So for example, with the shooting star candle, you have a very long wick at the top, followed by a small body and a small wick at the bottom. This means that price opened, price likely went very high, but ultimately closed lower than its opening price, but still close to the opening price. So price tried to go up, but closed back relatively close to the opening. For the second candle, you have a hammer, and this is kind of like an inverted version of the shooting star. Basically, price opened, that time frame opened, price moved down, but then ultimately closed back close to the opening price. In this candle, it's green, so the closing price was higher than the opening price. But it has then a very long wick at the bottom. We have the third candle, which is a doji. A doji usually indicates that there wasn't a lot of movement during that time frame. The wicks are very small, and the opening or closing prices are usually almost identical. There's not much difference within the opening and closing prices. This basically means that there wasn't much activity. Everything was centered around almost the same prices. Next, we have the dragonfly doji. This is similar to the hammer, but in a smaller time frame or a smaller version. Basically, this has exactly the same price movement, as in it has an opening and then price moves down, comes back up, but this for a doji, the price closes at almost the exact same as the opening price. And we're gonna skip the long-legged doji for a moment and go to the graveyard doji. And this one is almost similar to the shooting star, where price opens, it moves higher, but then closes close to or almost identical to the opening price. Okay, let's go back to the long-legged doji. This candle shows that there was a lot of volatility and a lot of movement within price. That's why you have long wick at the top and long wick at the bottom. But price ultimately closed almost similarly to the opening price, showing that neither the bulls nor the bears during that time frame won out. It's showing indecision within the market. And we're gonna discuss candlestick patterns in the next few slides, but I just wanted to show these right now in advance. These are the bearish and bullish engulfing patterns. And it's basically when you see two candlestick patterns right next to each other, where one has a green full-bodied candle, and then the following candle is a red candle that engulfs or basically swallows up the entire candle. That's the bearish. And for the bullish engulfing, you have a red-bodied candle and then a bigger green candle that basically takes up the entire body of the red candle. Okay, let's get into what exactly candlestick patterns are. Now that you know what candlesticks mean, what they're conveying to you about the price data, and you know a few different types of candlesticks, what are candlestick patterns? A candlestick pattern is a specific movement in price or a pattern, as shown on the candlestick chart, that some traders believe will predict future price movement. Just like how meteorologists use different weather patterns to predict future weather behavior, this is similar to how traders use specific movement in price from the past to predict price in the future. Let's get into some very clear examples. Okay, so we already discussed the bullish and bearish engulfing candles. Now we also have the bullish and bearish harami. This is almost the exact opposite of the engulfing pattern, where you have, for the bullish harami, for example, a very big red candle, and instead of followed by a green candle that's much bigger, you are followed by a green candle that's about half the body size of the red. This is the bullish harami. And then we have the bearish harami, where you have a very big green candle followed by a red-bodied candle that is about 50% or half the body size of the green. Next, we have some different patterns for you. We have the tree-line strike pattern, which is the bullish pattern, and we also have the tree-line strike that's bearish on the other side of the screen. These are called reversal patterns because usually when you see these, it means that price is going to move in the other direction. The bullish tree-line strike has 3 red candles followed by 1 green candle that basically engulfs all 3 of the previous red candles. And the tree-line strike bearish has the similar but opposite structure, where you have 3 green candles and then 1 very big red candle that engulfs all 3 of the green candles. Next, we also have the evening doji star and the morning doji star. Even though in the example that I have here on the chart for the evening doji star, it could also be seen as a gravestone doji. And basically the difference between these two is that the evening doji star has 1 big green candle, a doji, and then a red candle. But in this particular example, it's kind of like a shooting star rather than a doji. So it could be considered a gravestone doji. And for the morning star, you have a red candle, a doji, and then followed by a green candle. Okay, now how do we use candlestick patterns? The most important point when using candlestick patterns are where and when. Candlestick patterns are the most useful when used in combination with other technical analysis tools. So, where does the pattern appear on the chart? Is it at a support and resistance level? What is the overall trend of the market? Are there other indicators that can help you make an educated guess on where price is going? Are there oscillators that you can use in combination with the pattern? All of these things are important to consider when using candlestick patterns in your trading, and we're going to go into all of these in the following episodes. But where and when these patterns occur in a chart are very important. Let me give you an example. If you have a downwards trend, which we'll get into soon, but if you already know this, if we have a downwards trend and you get one of these reversal patterns that I just discussed, then it means something. If you have, however, a ranging trend where price isn't moving up or down, it's just stuck within a range, then if you get one of these reversal patterns, it's not really saying anything about future price or past price even. Okay, is that understood? All right. Then let's get into a summary of everything that you learned within this video. So you learned that trading is basically exchanging one thing for another thing. It's usually goods in exchange for money, but in the case of trading cryptocurrencies, you're trading usually fiat money in exchange for cryptocurrencies. But on the exchanges, you can usually find USDT or USDC in exchange for the cryptocurrency. Sometimes you have Bitcoin in exchange for another cryptocurrency. And on services such as Uniswap, you usually have Ethereum in exchange for another cryptocurrency. You also learned that technical analysis is the financial analysis method using market data to identify trends and make educated guesses on where price is moving next. You also learned how price is illustrated within charts, how to read candlestick charts, and how to read candlestick patterns. Okay, now that you know all of these things, you are ready to get into the next episode of Technical Analysis for Beginners, in which we'll be discussing support and resistance. This is extremely important because this obviously helps you make even better educated guesses and even more. It increases your odds of winning a trade even more. Thanks for watching. If you did like this video and learned something new, remember to hit the like and subscribe and hit the bell notification to follow along for the next episodes. We'll be discussing different topics within technical analysis. And comment down below if you would like to learn about something specific or let me explain a question that you have. I'd be looking forward to hearing your feedback as well. And I look forward to seeing you in the next video. Bye!